And just for my final slide, I thought I'd run through a couple of most of the issues that you get for certain expenses when you're looking at getting your qualifying expenditure. So, documentation of expenses. Obviously, this is, you're putting in a tax return. You've got to be able to document all your expenses. You're going to go through an audit process. Documentation of expenses is quite important. From the accounting point of view, you need a lot of detail in your general ledger so Screen Australia can actually determine the nature of the expense. So, for example, you can't just go out and your general ledger say, I gave the production designer $1,000 and they spent $1,000, there's $1,000. You actually have to itemise all expenses. So, you need the level of detail where you're actually going, I bought a jumper for the character Clarence on the 23rd of June and things like that. So you actually... and this is where a lot of the accounting work goes on, is the level of documentation required is probably a lot higher than normal, because Screen Australia basically have to review the ledger and when they're looking for non-QAPE items, because they're not going to go back to every single source document. So you need a very high level of description in your general ledger. And obviously when money's going out to people for petty cash and coming back in, quite often that process is... needs to be in place so that you capture as much information as you can, so that Screen Australia, when they're doing a review, and basically you'll just slow down the whole process if you don't have a great level of documentation, because Screen Australia will come back and go, what's this, I need more information. So the more information you can put into your general ledger, the better. You have to have a general ledger to go in for producer's offset. It's one of the requirements, so you can't just duck in with an Excel spreadsheet or anything like that. It is a requirement that you submit a general ledger. Costs need to be production costs, not distribution costs. The legislation is very specific that the QAPE are costs incurred in the making of the film and not the distribution of the film. And there are a few exceptions to that, and I'll talk about that in marketing costs below. But basically, once your film's delivered, all your costs pretty much should be there. So any costs in actually getting that film out there are not costs in making the film, they're costs in distributing the film. There are some specific exclusions. Overseas purchases, a lot of overseas purchases are not QAPable. Most overseas shooting costs, I'll talk about the Gallipoli clause down below, but a lot of overseas shooting costs are excluded if you do have to go overseas as part of your shoot. Pretty much all financing costs are excluded. The main financing costs you get are interest on cash flow loans, but there are some other financing costs, like if you've got legals involved. So if there are legals of a lender, then those are excluded. And if you have an EP whose sole purpose was bringing on financing, that EP fee would be excluded as well. So basically, all costs related to the financing of the film excluded. And the last bit is the wrap party. They don't let you claim the wrap party as QAPE, which is quite a shame. And also any donations or gratuities, like if you've bought a slab of beer to get a location or something like that, that slab of beer unfortunately is not QAPable. There is a 20% cap on above the line costs, so above the line being your key creative costs, your writer, producer, director, key cast. You've pretty much always got to have one key cast or one cast member above the line. My experience has been Screen Australia will insist on that, even if you've used, say, this is the first feature this person's acted in. If they're the main character, they'll say, Screen Australia will say they've got to be above the line. But those costs are capped at 20% of the whole budget, and obviously there's, the rationale for that is so again, you don't get the producer going, I'll charge $700,000 for my fee and I'll get 40% of that back. So, that just controls to make sure that, there's no blowing out of expenses above the line. Development expenditure is one of the spreadsheets that you specifically have to list in the QAPE spreadsheet. Development expenditure spent overseas is generally not QAPable. So if you go overseas for a market or something like that during development, one of the issues with development expenditure I find is documentation. If you've been developing a project for 6 or 7 years, finding that invoice where you've paid a script supervisor 6 years ago can often be problematic. So when people are in development, I encourage them to I encourage them to set up a separate account in their general ledger for development costs for a particular project, so that way you can track development costs. The overheads I did run through a little earlier, but they're basically 5% of the rest of the budget that goes in that you can claim, which is a nice little learner for the producer. There are very specific rules around travel and specifically airfares. Casts coming into the country you can claim, but casts going out you can't claim. If you're bringing people in and then taking them out again to another country, there are rules about that, whether they're Australian or not Australian. So you basically, all your airfares need to get listed as part of the QAPE application. Pretty much every leg of every airfare for every person gets listed. Music, this one quite often catches up producers in that if you're getting an overseas composer or buying music from overseas, that's not QAPE. And it's quite often producers go, oh, I didn't think of that, So quite a lot of producers get tripped up on during post, they're buying stuff from overseas, not recognising that it's not QAPE. The Gallipoli clause, which I briefly referred to earlier, there's specific legislation about if you actually have to go overseas during your shoot to shoot something specific, and they use the example of the movie Gallipoli there, then certain costs of those would QAPE. So if you take Australian crew over, those costs are going to be QAPE, but if you actually employ crew over there, they're generally not. So some of the costs will be QAPable and some won't be. You have to prove that you needed to go overseas. It can't be, oh well, I was just shooting in a desert and I had to go over to Egypt. Well, we've got desert in Australia. Maybe you didn't have to go down there or something like that. You've actually got to have a defensible reason for why you're going overseas. It's worth noting the legislation is very specific that a deferral is not considered QAPE. So if you have somebody who defers their fee, that basically involves saying you will only pay me the fee out of the profits of the film, then it doesn't actually meet the definition of an incurred expenditure, because the expenditure is actually dependent on a future event. So if you have people deferring fees, saying, oh, I'll get paid when you get some money in, those costs aren't QAPE. So deferrals, which used to be fairly common, are now a lot rarer. That's when sometimes people look at reinvesting part of their fee instead of deferring part of their fee and things like that. Costs in a subsequent financial year. Again, if you've delivered in a year, it's very hard to make an argument that costs in the following year are going to be QAPable because you've effectively delivered. There are some circumstances where you can do it. So say, for example, if you had an actor who hadn't given you the tax file number until the following year and you couldn't make the payment till the following year, you'd put that in as an incurred expense in the estimate to complete. So there are some expenses. The audit expense is another one. Quite often, you get the invoice in, but the work might not be done till the following year. But generally, most expenses incurred in the year after delivery, you've got to really make an argument with Screen Australia for them to be included, because their position is, well, you've delivered the film, you finished the film, therefore why are you still incurring costs? Are they more likely to be distribution rather than production? Marketing costs is quite interesting in that the overall position is marketing costs are not claimable as QAPE, but then the legislation actually circles back and then specifically includes certain marketing costs as QAPE. So things like your key poster art, your trailer costs, your publicists are specifically included as QAPE, your EPK, things like that. And there are a couple of general sort of bits of legislation about producing additional materials. So if you're doing a behind the scenes, then you can make an argument for including some of those costs as a production cost. So whilst marketing costs generally are considered non-QAPable, there are sort of like several inclusions that you can include them in QAPE. And the last point, which I actually touched on earlier, which is the interested party. If you have people who are an interested party who have an ownership position who are also providing services, then they're separately identified in the QAPE spreadsheet, and Screen Australia will scrutinise those to make sure they're at market rates.